In this video, I will show you a strategy that is easy to use, and from the backtest that I did 100 times, this strategy is very profitable. So with this strategy, we are going to use 3 indicators, and I'm going to explain each of the indicators and give you all the settings you need for these indicators. So the first indicator that you are going to use is the MACD. So the MACD, what you need to do to put the MACD, you just go to indicators, go to oscillators, and then you select the MACD. So the settings for the MACD are going to be the default settings. You don't change anything on the MACD. All you need to do is to make sure that you have 12, 26, and 9, and then we are going to click done. So once you do this, you are going to see your MACD right here. So why do we need the MACD? The MACD is going to help us to get the entry, right? You are going to get this entry signal from the MACD, because from the previous strategy that we did, we know that if the MACD is crossing up and down from this histogram here, this is the points where the market is going to be turning. So there's huge chances of getting a big move or a good trade after a turnover of the MACD. So the MACD have got this MACD line here, and then this histogram line here. But the problem with the MACD here on MetaTrader is you only have one line. If we were on TradingView, by the way, if you want to start using TradingView, you can join them and get 1 month of free trial to get all the premium indicators that you need. I will put the link in the description below. Now on the MACD here, we want to put the moving average so that we can get 2 lines here and get the crossover. So how do we get how do we put another moving average here? All you need to do here is, let me show you how you do it. So I'll click on docked and put my I'll put my screen just like this. So you go to view here, you click on view. Once you click on view, all you need to do is go to navigator here where it says navigator here. We want to put the moving average on top of the MACD. So I will click on view, I will go to navigator, and then I will go to indicators. So it will look like this, and then you go to indicators, you click on indicators, you are going to see a list of indicators here, and then you click on trend here, and then you find the moving average. So let me do this. You come here, you find the moving average, and then what you want to do is you want to drag and drop the moving average on top of the MACD. Once you do that, you put the period 2 for this one, and then you are going to apply exponential and then apply to previous indicators data. This is very important. Apply to previous indicators data, and then you click done. Once you do that, you're going to see the moving average, which is the blue line here, going on top of the MACD, right? So let's maximize the screen. Once you do this, you are going to see here we have the MACD and this line right here. So we're going to be getting our entries when these lines cross here. If they cross up, we are going to be looking to buy, and if they cross, they're going down. If the blue line crosses going down, we are going to be looking to sell, and if the blue line crosses going up, we are going to be looking to buy. The reason why we do this is because the MACD and this moving average is going to help us know where the bigger market swings. But there's a problem with just buying and selling at any point. Why? Because you are going to see that sometimes the MACD will cross, but we will not get a big move out of that. So to get big moves and to get more accurate results, we will add 2 more indicators here. So the first one that we are going to add is the 200 period moving average. So we add the 200 period moving average simply because we want this 200 period moving average to help us filter the trend. We know that if the market is moving below the 200 period moving average, we are going to be likely to get sell positions because the market will be in a long-term downtrend. On the other side, if the market goes above the 200 period moving average, you are going to see that the market is going to be in an uptrend. So you can see the moving average is going to help us to filter the trend so that we can follow where the market is already going. Now I want to put one indicator, and we're going to use this indicator for take profits, right, and also to confirm the trend. So I'm going to go to moving average to indicator, go to trend, and this time take this is called which is called the parabolic SAR. So the parabolic SAR is an indicator that shows you the short-term trend of the market. So if I zoom in here, you are going to see that if the market is in a short-term trend, the parabolic SAR dots here is going to be below the prices, right? The indicator, the settings for this one is default settings. So you are going to use this one here. As you can see, the market, when the market is below these dots here, we are in a small term downtrend, and when the market goes above these small dots here, we are now in a short term uptrend, right? So now let me show you how this strategy works. So before I show you how this strategy works, I just want to invite you to join our Forex Mastery 1.0 course, the course that is helping a lot of people coming from knowing nothing about forex trading and being able to create their first profits in the market. I will leave the link in the description below. So to get our entries here, here's what we look for. We said we are going to be placing sell orders if the blue line, which is the 2-period moving average, crosses going down, right, and it crosses the red line going down. We will be looking to sell at that point. So I'm going to show you some selling examples. So if I mark out this level, you can see on the crossover of this, when the blue line is going down, on the other side of the market, we have the market which is already below the 200-period moving average. And since the market is below the 200-period moving average, the other thing that we are going to be looking for before we sell is the market needs to be below the parabolic SAR. So we want to confirm the trend again. So after the crossover here, we are going to wait for the next candle, which comes right here, where the market is now below the parabolic SAR. And once we see that, we're going to sell at the close of that candle right here. So I'm talking about at this point right there. This is where we are going to be selling. Once we sell at this point right there, right, once we sell at this point right here, so if we sell at this point right here, let's just write sell at this point. We want to put your stop loss on the parabolic SAR line. This is why we want to use the parabolic SAR, because the parabolic SAR, if the parabolic SAR is far away from the market, it shows more momentum, and if the parabolic SAR is very close to the candle, then the momentum is getting less. So we're going to place the stop loss right here, and also it will help us if the market goes above this zone, then the market might be in an uptrend. And then we are going to use risk to reward ratio 1:1 of this. The reason why you want to use 1:1 risk to reward ratio on this strategy is because it have got a high win rate, right? So if the strategy have got a high win rate, most of the time, if you try to use bigger risk to reward ratio, then chances of you making profits are very few. So here your stop loss here, and then you put your take profits 1:1 risk to reward ratio. So this was a winning trade. Let me show you another one. So here we can see that the MACD crosses, this blue line crosses going up. We don't place the trade because we want to see the cross going down for sell orders, because we are below the 200-period moving average. So at this point right here, you can see a crossover happened. A crossover happened right there. And then you would enter your sell position at this point. Why? Because we are below the 200-period moving average, and also the market is below the parabolic SAR. So also if you sell at this point here, you put your stop loss on the parabolic SAR exactly, and then you put your risk to reward ratio at 1:1 risk to reward ratio. So this was going to be a sell position, and then you put your stop loss there, and then you put your take profits down below at this point right there. So you are going to profit again on this trade. Let's keep moving, and I'll show you another example. Here the cross happened going up, and now we have the cross going down. At this point, you want to make sure that after the cross happens, you place your sell order, right? So we are here. Once that happens, we place your sell order at this point. You sell, and then you put your stop loss on the parabolic SAR, and then you take profit 1-to-1 risk to reward ratio. So don't be greedy with this one. So again, we have another crossover going down at this point right here, so which means you are going to sell at this point here, put your stop loss above the parabolic SAR, and then put your take profit 1-to-1 risk to reward ratio. So this was another trade which was going to win. Now you are going to wait again until at this point right there. So at this point right here, you can see that we had a crossover at that point, and we were going to place our sell order here, your stop loss on the parabolic SAR, and then your take profits down below. So in this case, the market moved, and then it hits your stop loss. So this is going to happen in the market. You are not going to always win each and every trade, and I'm showing you this to show you that this strategy have got a very high win rate, but it's not like it's gonna win 100% of the time, right? So another example here, the crossover happened at this point. You are going to place your sell order at this point right here. You put your stop loss on the parabolic SAR, and then you put your take profits 1-to-1, and this was going to be a winner because you sell at this point, you put your stop loss here and your TP down there. So you're going to win at this trade again, right? So now let me go ahead and show you some buying trades, some buying examples, right? So you're just going to move back, and then let's look at this example right here. We see a crossover on the MACD. So the MACD, we look at the MACD first, and now we are above the 200 period moving average, so we are looking to buy. So after this crossover, you are going to place your buy order at this point. You put your stop loss on the parabolic SAR, and then you take profits 1-to-1 risk to reward ratio. So this was going to be a win trade. And then we have another example here, cross up. So the blue line is crossing above the red line right there. You put your the crossover happened at this point right there. You buy at this point, you put your stop loss on the parabolic SAR, you put your take profits 1-to-1 risk to reward ratio. So this was a buy, this was the TP for take profits, and this was the SL for stop loss, right? So this was another example right there. So this strategy is very simple. You can go into the market, start testing for yourself. Here you can see a lot of sell opportunities here, so a lot of winning sell trades right there. So you can get a lot of money from this strategy. All you need is to have discipline and know what you are doing. You need to practice. So the best time frame for you to trade this strategy, I think for me, I was testing this on the 1 hour time frame because I just like the 1 hour time frame. It gives me more time to look into the market. But see, if you want to trade smaller time frame, I'm sure the strategy is gonna work also. Also, the strategy is gonna work on a lower time frame. But the higher the time frame, the better for most of the strategies. But if you go to the lower time frame, also you're going to be able to place more trades. And for most people, they think placing more trades makes you make more money, right? So this is the video, guys. Thank you for watching. If you are interested in more videos like this, make sure to subscribe to this channel and join our Telegram channel for free. I will put the link in the description below. Thank you, and I will see you in the next one.